Welcome to the Brewed podcast,
where we unpack today's news
and separate the sense from the nonsense. I'm your host, Jay.
And I'm your co-host, Kadi.
And we would love for you guys to follow and subscribe to our channel. And today we have something really, really special. Considering that a few days ago was April 15th, and that is tax season, tax day, and the day that all accountants really, really love to read. We have a special guest on today. This is the CEO and founder of Wendy's Accounting and Tax Service, LLC. She is going to be dropping some nuggets, some pearls, some wisdom for us for this upcoming year, as well as the next tax year. So we have some questions that we know a lot of people are curious about. Maybe you filed already. Maybe you haven't filed and have requested an extension because you need more time. So we're going to try to jump in today and ask as many questions as we can to give our viewers a ton of information. The only caveat we have is to make sure that you are actually reaching out to your own accountant in your state to make sure that you are following all of the guidelines tailored towards your state to make sure you're not missing any deductions. So thank you so much, Wendy, for joining us.
Thank you for having me.
Of course, it's our pleasure. All right, let's jump into this. You ready?
Yes, I am.
All right, let's go. So let me just go to 101 basic, which is what documents do you need to have from our client in order to complete their return?
Okay, so let me start with number one, a driver's license. We must have that.
Or would it be any type of ID or just a driver's license?
Passport is also good. We need to have an identification from you with your picture on it.
Okay, so that could be any type of state ID.
Mm-hmm. Yeah.
Yes.
Okay, that's awesome. All right, what other documents would you need?
Okay, W-2, if you're an employee, 1099. If you're a contractor, that would be a 1099 miscellaneous or NEC. They have two now.
Oh, wow.
Yes.
Okay, so the contractor is a person who pays their own taxes and the employer does not pay their taxes, correct?
Correct.
Okay. And a W-2 is for an employee who their employer pays their taxes on behalf of them.
Correct.
Okay, awesome. All right. So those two, 1099s, NEC, and miscellaneous, and W-2s. What else? What other documentation do we need?
Okay, so then 1098, which is a mortgage statement, which would also be required if you own a home. Then we talk about 1099 interest statements, 1099 dividend statements as well. Those two, they would come from your bank and send it to your home.
Okay, awesome. All right, so we have those. You know, one thing I didn't talk about or we didn't bring up here. When is the deadline for all of this stuff? Meaning not April 15th. We're not there yet, right? But where's the deadline? So I know there's one deadline at the end of January, right?
Right. Yes, it is. January 31st, W-2s are required to be out. That's an IRS mandate. February 15th is for all 1099s to be out.
Oh, they're separate days.
Oh, I always thought it was January 31st for both.
Now, February 15th has been the date for all 1099s.
Okay.
All right.
And the 28th of February is the final deadline date for 1099s. So when they come out, if they're due out by the 15th, you are required to look over if there are any mistakes. You can reach out to your employer or wherever you get your forms from, and you need to correct it at that time. Then by the 28th is when everything should be final.
Wow. Okay, that's important news because I think a lot of people probably were waiting just for that January 31st deadline, thinking that everything
Yes.
would be out by then.
Oh, yes, because we normally get clients in our office and they always tell me that they have not received certain forms. And technically, most of the forms that they are always talking about are 1099s, 1099Rs, because those take a little longer. Some do those last. Most companies have quite a few 1099 contractors. So if that's the case, then they take a little longer to come out. They're due out by the 15th. Does it happen all the time now?
Okay. So we have the 31st of January.
Mm-hmm.
Okay. We also have February 15th.
Uh-huh.
Yes.
Then we have February 28th.
28th. Uh-huh.
What's another deadline that we need to do?
April 15th
That good.
is the date that all taxes are supposed to be due in. Now, are they? No. But some, but we do have clients that really look forward to that 15th date. Then we also have those that look forward to the latter dates, like October 15th, end of extension.
Okay,
Right.
so here's the deal. So if I was not able to get my stuff done by April 15th, then I would be able to file an extension because I can't just take it. I can't just do it. I have to basically file something in order to get an extension, right?
Absolutely. You have to file by the 15th. That's absolute.
So this is interesting. So everyone still has to put something in on the 15th,
Yes.
even if it's
Yes,
oh shebang, right? And I
pretty much.
got to let them know
Right.
that I want more time.
Yes.
Okay, I got a random question. What happens if I don't let them know I need more time?
I generally tell my clients that you better get your stuff together and get it in as soon as possible because the penalty and interest will start.
Okay, that's a great question. That leads us to the next one. What type of penalties and interest are people facing?
Let me say this penalties only occur if you owe them.
Oh, wait a minute. Let me make sure I heard this right. So you get a penalty if you owe them, but do they give you interest, my lady, if they owe us?
Yes, they do.
Oh,
You will get interest if it is late.
okay. I like this. So it is fair because I was ready.
Of course you were.
I saw.
That's it. All right. So that's actually awesome. All right. So we have, let me go to the deadlines again, January 31st. That's going to be the end of the actual W-2 process. Yeah, February 15th, right? Which is the initial
Yes.
1099s are due out. And then we have February 28th.
Yes.
Okay. What if it's a leap year? I'm just messy.
Still the 28th.
Okay. So, okay, just messy. Okay. And then, all right. So we have that. And then we have April 15th, which everyone and everything is due by. Should we need this extension, right? We then would file again by April 15th still to get an extension to October 15th. All right, looks like we're good. All right, let's move on. One thing I hear about a lot is deductions, right?
Yes.
So I hear about it and I hear people say, oh, I get to write that off. Can you give us a little bit more information of one, what a deduction is, and two, what types of deductions are write offable, if that's a word?
So deductions. So when we speak about deductions, we generally speak about things that we can write off that will reduce our income. Those are the good ones. Now, deductions can be taxes, can be property taxes, can be real estate taxes, can be mortgage interest on your home. It can be charitable contributions, any charitable contribution, or it can be goods that you have given away. That also is a deduction.
What about goods you purchased?
Well, goods that you purchased that you no longer have are the things that you get to give away. And you get to give a monetary value toward those.
So let me ask you this. So deductions are not just things that we buy to run the company. They're things that we give away.
So there's the personal side, which is the standard deductions and your mortgage, house contributions, but charitable donations are the most. Now, when you have items in your home that you no longer want, but are still salvageable and usable, you have places where you can go and drop off those things and receive a slip. But the deal is be careful where you go. You need that slip in order to claim it on your taxes.
So I just can't tell you that I gave, we'll say, Katie over here, a pair of some classic Jordans, right?
Mhm.
They're usable, they're amazing. And if I just gave them to her and there was no slip, right, or no documentation that I gave to her, I couldn't write that off.
You can't give stuff to another person. So there's stores out here that you would give these used items to if you want a deduction.
Right.
Now you can give them to her, but you won't get a deduction.
So have you ever gone to Goodwill store
I
and
have.
so you didn't take a receipt?
Thank you so much for the judgment. I didn't get the slip. There were times of stuff, especially if I'm getting ready to move or something. I'm they've gotten some amazing things, sometimes brand new things.
You collect your slip.
You have to get your paper.
We got to get the paperwork at the end of the day. Paperwork is one of those things. Should Iris call on the accuracy of it, right? We'd have it to say, "Hey, there you go.
It happened.
All
Right.
right."
Yes. Let me just say one thing about the paper, because most of these places where you go to give items away, all they'll do is put their signature on it and the date. It is up to you to write down what those items are. Don't rely on your memory.
Mm. It's funny. You want to hear something wild?
What?
I would document all the stuff that I did give them, but I never got the paper. Like I knew I'd be like 5 pair of jeans, 7 pair of shoes, right?
Right.
A dresser. I can have all that stuff in my records, but I never got the paper.
Yeah. Without the slip, it didn't happen. So you need the slip.
You need the slip in order to file it.
Interesting. Got it. So this is why this conversation is so important, though, if you think about it. Because I know I can't be, even though I'm feeling judged, I know I can't be the only person out here that probably has had this type of situation where you've given something in the hopes or the thoughts that you'd be able to write it off later.
I get it all the time. I just ask, where's your paper?
Right.
If you don't have a paper, I'm sorry.
It
They're not going there. They can't go on.
Mm-hmm.
All right.
Okay. So, can you tell me some of the things that I can write off as a contractor or a self-employed individual?
Ooh, that's a good one.
So, depending on the type of business you have,
Right.
you're going to include your income. There's a 1099K, which lists monthly each amount of money you earned, and it will be on that month that you earned it.
So
Okay.
for a company and I get payment for them, they're going to give me a 1099K?
So, no, those go out only for people who work monthly jobs.
Oh, so I didn't know about this. This is why it's important. So 1099K is not something you see often then, right?
No, you'll see them like for Uber drivers.
Oh.
They tend to have a special kind of form. It's not special to them because they've been out before.
Right.
Sometimes you may get it from hairstylists
Mm.
because of the way they report to their employer, or if they are working for someone. Otherwise, it would be the normal 1099 miscellaneous or 1099 NEC.
Okay, that's important.
And NEC stands for non-employee.
Mm-hmm.
Oh, learning a lot.
Yep.
So that is the first that you need for a contractor. Now, that's not the only though, because there are contractors that don't receive any paper. And it is up to the company that they maintain their records as to how much money they earn.
Oh, so is that under a certain amount? Well, I'm trying to understand how a 1099 would not be mailed to a contract.
Well, because first of all, you're not required, employers are not required by law to give you a 1099.
I didn't know that.
Most companies do it because they are maintaining and keeping their records.
Wow.
And they are also notifying Internal Revenue of what they've given out
Wow.
by means of payment.
Right.
So, but there are companies, there are jobs. If you are the contractor of a business, you're not required by law to do a W-2 for yourself or a 1099 for yourself. Now, having said that, you're still trying to report your income. So it is called income earned.
Mm.
And you put that number down based on what your company earned. That's how you file a 1099, or that's how you file for a contract.
Okay, this is so awesome. Let me ask you this, and this is kind of along the same vein, but we know that there are two systems, this federal and state.
Mm-hmm.
Do we have to file both?
You're required by law.
Okay. Yeah. Now, it's funny because one thing that I'm going to jump into with that question, which is during amendment time, right? Which is always worst time for everybody, right? Maybe you
Yes, amendments.
right,
Yes.
mistake on your tax return and you got to go and correct it. So one of the things, and you have to help me, Miss Wendy, with this is once I find a mistake and we come to a service like you, we say, hey, there's a mistake on our taxes. And you say, okay, we have to file an amendment, right?
Right.
Who goes first? Is it federal or state? Okay. Now we all know that federal is like cold syrup. It is the slowest thing around, right? And federal takes forever.
Right. And no, it's going to be worst. So
Oh, bringing up current politics.
I'm just saying.
And it's accurate because they're firing, and I'm gonna be correct, a lot of people, right? So if there's any concerns that we have, it's going to take even longer. So federal goes first, and then the state goes for the amendment process after it's accepted by the federal.
Correct.
Okay. So the federal has to say, yes, we approve this amendment in order for the state to even.
Yes. Correct. You're absolutely correct.
Okay.
So let me just state this. So amending a federal tax return to get a response back is a minimum of 16 weeks. A minimum.
Minimum. Okay.
No. But that's fully staffed.
What? Yeah.
Think about that. So that's fully staffed. So it's a minimum of 16 weeks with everybody working. Now, is anyone turning on the TV? Because right now we have so many people being laid off and fired at the IRS, right? So if at minimum, when we had everybody working, pushing their little pencils, right? We had 16 weeks. What does this mean for things going forward if people are being cut out the workforce at IRS?
One could assume that the delay would be longer than 16 weeks.
Hot damn. Think about that then. So I'm going to just ask this. Is the state patient? Like, are they going to be like, all right, I understand that IRS is like cold syrup? Or is the state going to be like, we still going to go with this non-corrected tax return?
Well, that's a tough one because it's going to be a decision made state by state, depending on what state you're in. Maybe what you might be able to do is if the amended return is sent electronically, you can get a submission history as you file. So you may be able to go back to the person who's electronically prepared your return to get a submission date. That may help you. Generally need a copy of the federal. But because we do electronic now, you will have to fax it to them if they want a copy of your federal. I know back in the days before electronic, when we did amendments, we would send a copy of the federal along with the state. Now, when we electronically send, they don't get a copy. They just need to know that it was accepted, and they do get that notice from Internal Revenue themselves.
Okay, that's good to know.
Now, just getting information stating that your amended return was electronically sent, that is a footprint. And on that footprint, it will state whether or not it was accepted.
Okay.
And that may be sufficient enough to get the state moving on the state amendment.
Okay, that's good. That is great news. And it's interesting again, like there's going to be so many things that impact kind of how things move forward. There's going to be so many things that impact how things are handled within IRS as well.
Yeah.
Right?
Absolutely.
Okay. Let me ask you this, because this is actually something that I know that we were talking about deductions before, is what records do people need to keep in order to really claim? I know we talked about the paperwork for the giveaways, right?
The donations.
Sorry, donations.
Yeah.
Right. What other paperwork do people need to keep for deduction? So I go to church and I know they give me like a tithing kind of breakdown at the end of the year. Is that something that you would need?
Absolutely. So not only that, any church statements, if you do charitable donations, they do send you back receipts with the amount written on. And I tell all my clients to please keep those if you want to be able to claim the donations. Again, we can't use memory.
Right.
And I keep bringing up memory because clients do come with memory.
A lot.
Which leads me into this question. So for a client who's always relying on memory, what would you say to them, the best way for them to track their expenses or any form of donations? What would be the best way going forward to track those to make your job easier?
Absolutely. How about paper? This keep your receipts is
Mhm.
so important. I mean, just if you keep all your records, if you just create a folder, a tax folder, everything that comes in that you're not even sure about, throw it in there.
Mm.
Because when I go through it, I will identify what is good, what isn't. And then I can process a real return.
Right.
But if I have to keep calling, it just slows up the process of you getting your money because I have to keep calling you asking for information.
Okay.
So the long end of that is just throw it in the bag. That brings me to a question. How much stuff do you normally get from people that you have to go through? I think about that. If I'm throwing everything in the bag, well, you ain't gonna like me because I'm gonna be throwing everything from Cheeto.
Well, we know. Well, here's the thing. We do know. I don't need your Washington gas bill.
Who don't know that?
I don't need electric bill unless you run a daycare.
Oh,
Oh,
see, look at that.
If you run a daycare, then of course, all these things can be done, especially if you're running it out of your home.
What if you're working out of your home though?
Okay, so there is a form for working out of your home. But let me just explain a couple of things about working from home. Because everybody think they can claim
The cat, the dog.
half their house, their mortgage, all the utilities.
Yeah, yeah.
It really doesn't work that way.
Why you
right.
get that folder full of all of those documents?
So working from home has its advantages. And I will tell you, the advantage is for daycare.
Yeah.
It's
Oh,
not set up for no one else unless you are utilizing a fair amount of your home for your business.
Is that bigger than a room?
Yeah,
Oh.
yes.
But yeah.
See, so most of us utilize our office in our home,
right.
and that's it. That's not enough.
Mm.
It isn't because we have to come up with a percentage.
Mm.
So you have 3,000 square feet and you're using a 9 by 7, 9 by 12 inch room.
That equates to the whole mortgage.
Exactly. And so it works two ways because if you own a home, your mortgage, the way the process works is a percentage of your mortgage payment can be used, but it gets subtracted from your personal. So you have to ask yourself, if I take this portion and put it over there, all you have left is three portions over here. You don't get to have it in your personal as well as your business.
I like.
That's not the way it works.
Double dipping.
I,
That sounds like triple dipping.
Yes.
give me 3 scoops. Like take it. I mean, dang.
So you don't get all your mortgage on the personal side, and then you're gonna get this piece over here. 100% is 100%.
All right. So
So if you take 15%, you got three quarters for the personal.
Mm.
okay, so that brings up another question too about itemization, right? Do you remember we used to be able to write off everything, interest and all that
Yes.
stuff? Then there was a cap that was put. What year was that cap put on? Was it?
Ooh, that was put on in 2018.
That's what I thought. Okay, so around 2018, there was a cap that said, "Hey, on a personal site, you can only write off like 10 grand, right?"
Yes.
Mhm.
And if you have a house, let me be clear how little 10 grand is with interest, depending
It
on your
is.
loan, ain't nothing,
Mhm.
right? So before we had the cap, we could write off all of the taxes.
Well, the way it worked was prior to 2018, you could write off like 7,000 in state withholding. You could have 6,000 in real estate taxes.
Right. Yeah.
personal property taxes, and you would get all of that.
That's what I'm saying. So that's the point I'm trying to make. But with the cap, it actually cut everything down just to 10 grand.
Right. So if you're, let's just say, for example, that your total over everything was $16,000, you only got 10. So you literally threw away $6,000 in taxes.
Right. So that's the point. So I know that changed. So in 2018, that actually came on the board, which actually hurt a lot of people, especially the common folk, right?
Yes.
You can't use it.
You can't use it. It just goes away. It's just thrown away.
Wow.
Yeah.
Which is middle class. Personally, middle class is the one being hurt by this tremendously. I mean, because it can, I've seen as low as 12,000, so that you throw away 2,000. But I have clients that have 28,000, and 18,000 gets thrown away.
Which could be so helpful.
So yes, that does hurt. That is a big problem.
We are obviously giving Uncle Sam what he deserves, but also making sure we can live.
Yeah.
Right?
Agree.
Because the taxes, I don't know about you guys, but taxes, they're a lot.
And it's always changing. There's always something new or something for you to keep abreast of.
It is.
Yeah.
It is. Let me ask you a question, because that's actually something. Let's talk to the self-employed people just for a second. One of the things that I always hear with self-employed people, and some people have an understanding of it and some people don't, which is quarterly taxes, right? So if you're a W-2 employee, you don't have to worry about quarterly taxes. But if you work for yourself, right?
Mhm.
There's something called quarterly taxes. Can you talk to us about quarterly taxes and also quarterly estimated taxes?
All right, so let's talk about quarterly taxes. So quarterly taxes for self-employed individuals. So that means that they are required by law that they are to report every 3 months. So that means payroll is what we're looking at. So if you have employees and you are taking out Social Security, Medicare, federal withholding, state withholding, and any retirement or health savings accounts or anything like that, all of these things have to be reported in a quarterly basis,
Okay.
required by Internal Revenue. And this is for each employee that you have.
Oh, so every employee has Social Security, federal,
Yes.
state, Medicare. Anything else?
They could have health insurance that's coming through the company. They can have retirement that comes through the company. All of these things have to be dealt with in a quarterly basis. And depending on how many employees you have, determines when your quarterly taxes are due.
Okay.
So we, like, month to month, we pay. We have to do payroll month to month. So you have 2 pays in a month, or if you get paid weekly, it doesn't matter. It depends on the amount that you are reporting per month, which determines whether or not you are going to make that payment 2 days after payroll day, or can you make it at the end quarter? That's the guideline. So for an average company who has maybe 5 or more, they're required to pay the 2 days after payday.
Oh, so that depends on your company size matters.
Yes, all of it matters.
Makes sense.
Yes.
So then how does estimated quarterly taxes come in?
Estimated quarterly taxes work this way. Let's just say you owe taxes every year and you don't want to, you don't have to. So a couple of things can be done. You can say, okay, well, maybe why don't you pay estimated taxes? And they're due quarterly as well. 4 times a year. You can pay by December 31st or by January 15th. That will give you that 5th one if you need to, because they cut off after the 15th of the following year. Now, let's back up a minute. For estimated taxes, basically it's because you're short and you don't want to owe tax next year.
All right. So it's like, hey, I know that I have made more than I paid into the system.
Yes.
I need, in a way, like a loan a little bit. I need you some grace. Gonna give me some grace. That's what it is.
Now they don't. IRS doesn't do grace.
I knew it. I knew it. That's why they always want interest.
Yes. So estimated taxes are you just estimating
Right.
what your potential income may be for
Mm.
the next year. So you're trying to curve off and not have to pay additional tax next year. So you do these payments for that reason. Now, there's another piece that goes with this. There's a penalty.
They like penalizing.
So if you, yes, so this is something that really surprises people. If you owe taxes and owe a fair amount of taxes, and you're like, well, I'll just pay it at the end of the year. What people don't know is that the penalty will be based on when you made the money.
So months ago.
So let me give you an example. Let's say that you had 15,000 and let's say the taxes on that was 1,500. So you made 15,000 in the quarter, so that's $5,000 each month for 3 months. That gives you 15,000. But let's say that each month you also had your taxes were 1,500. And let's say one of those months you only put 1,000 in.
Oh God.
It's called a 2210. And the form shows how much you paid per quarter.
They gonna get their money. You know, I ain't never. They always gonna get their money.
Yes, they're going to get their money. So what ends up happening
Like
is
you
if
pay-
you didn't pay all of the taxes that you were supposed to pay at the time that you were supposed to pay it,
listen,
you get hit with the penalty.
listen,
Mm.
listen. All right. So that's great for all of our self-employed people. We gave you guys some tips. Obviously, estimated tax is not what I thought it was. What are some things that we can do to unburden us? Like I know a lot of people want to know. It's like, man, Uncle Sam always got his hands in our pockets, right? Is there anything we can do to like lighten our loads? Like I know itemized deductions. I think that they're still in play, right? We are able to do
Yes.
right.
Yeah, yes.
Is there anything
Let
else?
me make a point. This is something that hasn't been talked about since 2018. Something else was taken away from us. Miscellaneous deductions was taken away. And this is for the middle class person being lawyer, police officer, firefighter, pastor,
Oh,
Mm.
just to name a few. So, police officer, accessories. If you are a marshal, you're required to have haircuts. You're required to maintain a certain look.
oh,
Those expenses used to be under
Right.
wow.
miscellaneous deductions. So that was removed. If you are a lawyer, all your fees for your law licenses, you used to be able to write those off. They can only be written off now if you are self employed. But if you are an employee, you used to be able to write these things off. Miscellaneous deductions has removed that.
Oh.
Wow.
If you are a pastor, your robes
Mm.
that you clean,
Wow.
the mileage when you go see your parishioners, you used to be able to write those things off. It is gone.
Mm.
I guess they're gonna be getting
If, if you are a bus operator, your uniforms, you're required to look a certain way.
Right.
right.
You used to be able to write those things off in all your accessories for police officers, like guns, your holsters, your bullets, because those are the things that they're required to buy themselves. These things used to be a write-off because these are for your job.
Wow.
So miscellaneous deduction was needed. Even your tax preparer, you could write off tax preparer, which you pay your tax preparer back then. Under miscellaneous deductions, all these things are gone. And they've been gone since 2018.
Wow.
But
And this is all middle class.
can I ask for people in the back, what is left? What can we do? This is why I asked the question. What can we do to help lighten our load? Because if If they're taking everything, what's left?
Something else that happened during that time was how they gut punch the 1040.
Yeah.
So if you notice now, there are no deductions before you go to the tax table and your standard deduction.
Mm-hmm.
Mm.
So so now your adjusted gross income used to be different.
Mm.
It's not anymore. It looks just like your total income. Same number.
Mm.
So your total income is one, and then your adjusted gross income is the same.
So I don't think a lot of people understand adjusted growth income. Adjusted gross income is what?
It should be after you have deducted most of your deductions.
Mm-hmm.
And that number is what you get taxed on usually, right?
Yes, your adjusted gross.
But if they took it all away,
There you go. You're looking at your total income. So the only thing that actually comes out of your total income now is your standard deduction or your itemized deduction. That's it. Some other things that were taken away. We used to have an exemption for ourselves. We used to have exemption for our children. These are the things that you used to be able to write off, which would make that change different. So your total income minus your exemption and your children, then after that, you get the standard deduction or itemized deduction and any adjustments like student loan interest.
then why they keep giving us these statements that if they don't help?
Because if your income is within the guideline, you can get it.
Yeah.
Poverty.
Only, but very few. I
Right.
don't have too many to get it.
Right.
They normally get zero.
Listen. I was thinking about having like 4 or 5 kids so I can get,
Right.
You're not. So let me just say this: there is one thing for children under 17, so you can get the child tax credit.
Okay.
So there is a $2,000 child tax credit that is available.
That's it. Let me tell you how much these people cost.
Like I said, exemption used to be $4,550 per person.
Right.
I wanted to say something that is so not forward progress of where we are right now. We've been talking about we won't go back. I want to go back. Listen, I want to go all the way back. I want to go pre 2018 so that I can have a better life, right? We can.
Because the taxes at that time were better.
I remember it was like
Now,
something 5,400 or something like that.
yeah, it had gone up to, I want to say we stopped at 4,950
Mm-hmm.
because it used to go up by $50 every year
And that's per child.
per child per person. So you got it for yourselves as well as
Listen,
your children.
Wow.
I would have so many. I'm just kidding. I don't know if I am or not. I don't know if I am or not. Got to take care of them during the year. Just that one check. I'm just saying. So where we are right now, you get a measly. Let me be grateful. $2,000. That's nothing compared to everything that they cost throughout the year, right?
Well, it's not fair because there's a piece to this with the exemption. If you guys remember, you guys are old enough, I'm assuming that you're old enough that you worked.
Don't play with us.
When you remember when you first got your first job and you filled out your W-4
Yeah, I remember feeling
and you filled in your name, your address, what your status was, single, married, whatever.
right.
Remember the first question?
No.
How many exemptions would you like to claim on your W-4?
My answer was always 25.
Yeah.
All my check.
You're funny.
Am I?
But if you remember that question, if you look at a W-4 today,
What's it say?
it does not say nothing about it.
Well, they say we're gonna take this from y'all. Y'all play too much.
They did.
Mm-hmm.
And they did. Because now the question is, do you make $200,000 or less? Or $400,000 if you're married? And if you have children, multiply it times 2,000.
So things have changed so much. And it's actually what a great segue into our next question, which is about marriage, right? So Does marriage, divorce, and even having children affect your taxes? Which is better, married, single, or divorced?
Mm.
Look at
I'm
us.
always going to say married
Why?
Oh, why? Why?
because you're joining everything. You're not splitting because you lose deductions
Mm.
when you separate.
Okay.
So if you do married filing separate, remember that $10,000 allowance, you only get five.
I'm telling you, let me tell you something. I don't even get the whole 10. I got to share that, even though I'm
Got to share.
okay. Okay.
All right. So how can I claim dependence and what's required to do so?
What a great question.
Okay. Oh boy, that's been a wild subject for many a year.
Yeah, because you got, you know, me over here having 7 kids thinking they're going to get that fat check. And I actually, before I guess 20, they did.
Oh, they did. Yeah, they did. Because remember, the exemption, the $4,950 that you got for each child, each person on your tax return, that was a deduction. That came off the top of your income.
And had I known, I would have had kids earlier.
Yeah,
I'm out
that
here,
was the time to have them.
I'm out here thinking about, like life goals. What? Like, I'm out here trying to like get stable and trying to get rich.
Right.
Yes, for children, for dependents. I asked for a birth certificate.
Mm-hmm.
I asked for social security card.
Mm-hmm.
It's a must. We don't go past go till I get those two.
Can't be like, hey, I got my cousin's, kid that's been living in my house. I don't have any of their documentation, but I've been feeding them and clothing them and bathing them,
That won't work.
Huh?
It doesn't work. I
Yeah.
don't care about you been feeding and clothing. I need documentation.
Mm-hmm.
And here's the thing: if I were to put it on there, this is due for a hypothetical here.
Mm-hmm.
If it was to go on, IRS has this package called.
Check it.
Yeah, they do. They check it, and then you have to go and get the teacher to write a letter or the principal, the pediatrician, and they have to say who's the parent. And then it is the decision of Internal Revenue as to whether or not they will give you that earned income credit.
they said, go ahead and do this dirty work, and then we still have to have you wait and see, right?
Yes,
And we still could.
absolutely.
Wow. Wow.
Yeah, I mean, because earned income credit was one of the things that was hit the hardest years ago when people caught on to earning earned income credit and how much money it could net you.
Again, had I known, I'm sitting up here trying to finish things like school.
Yeah, but when people found out about earned income credit, they was trying to get the dog a social,
What?
Listen,
the cat a social,
they got costs as well.
any other live animals roaming the house.
Kibbles and bits could cost. Oh, hold on a second, Miss Wendy. But vet bills, I don't know if you've ever had pet, but they get expensive. I mean, they really are literally like children. I can understand a person feeling like they're children. Like, I'm gonna get my money back.
Yeah, a lot of people didn't know anything about earned income credit, but when they did, boy, oh boy, people went to jail. I'll just say that.
I can see how they would. No, I'm just saying it's true.
It's true.
Yeah. So, what would you say to children who are able to file their own taxes and not communicating with their
Mm.
parents? What kind of advice would you give? Because what I've noticed is that when children they go and they file their own taxes, say they're of age and they can do it, but they're still dependents, right? They they're checking the box that is saying that no one can claim them as a dependent. But then parents go and do their taxes and are claiming that said child as a dependent, the IRS rejects the parents' taxes. So what would you say
Absolutely.
to parents and children who are in that predicament or
Okay. So I'll say a couple of things. When parents have children that are working, they should give them the W-2. They should that should be the first thing.
You want me to give you my money?
No, I just want you to give me your W-2 because the chances you're not losing. So the child thinks that for some reason that they're not going to get their refund,
That's what I was going to ask.
Okay.
but that's not the case.
Does
They
it go
still get their money.
to the parents? The parents get it.
The children still get their money.
The children get theirs.
The children get their money, but the parents still get to claim them. So there is an income limit where the parents can no longer claim them.
Mm.
But if, I see a lot of this with college bound students
Right.
and they're 18, they're in college,
Mm-hmm.
they are working part time,
Right.
and taxes are coming out. They see this. When their W 2 come, the first thing they want to do is go file because they want their money.
Right.
Well, what they don't understand is even though parents carry them, they still can get their money. I do it all the time. The child gets their money and the parents still get to claim them because if they're in college and they're between the ages of 18 and 22, they need to be on their parents' taxes so that they can get the FAFSA because the way the law is written, the 1098T tuition statement that each child gets in January, it comes to them. But they are also supposed to turn it over to their parents. They cannot file for it. They're not of age. So they have to be, I think, 24 before they can use a tuition statement. So it has to go to the parents because technically the parents are still taking care of them, raising them, providing for them, all of the above.
Let me ask you a question with that.
Mhm.
And I believe that there's so many trustworthy parents out there, but I also know that there are not so trustworthy parents out there. So if a kid were to give their W-2 to their parent, right? Does the money come on the parent's return or is it for on a kid's return?
That the child have their own account, and I put their money in their own account. Parents don't get their money.
That's what I was wondering. So is that something specific that you do at your practice, or is it something that all accountants do?
Okay.
It's against the law to put their money in any other account other than their own.
Because I'm not saying that parents are shady, but I have ran across some that have had suspect behavior as parents.
It's a good question.
So that's a great question.
So because
And that's the fear for children. That's why they run out and go and do it. But see, they think that somehow they're not going to get their money
Mhm.
if the parents have their W-2. The reason why I state that the parents should get the W-2 is to prevent them from going to an outside source and not telling that person my mom can still claim me.
Right.
And that's what
Because all we're trying to do is keep everybody from not being rejected. Because that's what happens. Because so what are we doing? We're filing the child as a dependent. That's all we're doing. But if they go out and they don't tell the person that's filing their taxes that, what ends up happening is they become the independent, but they're not
the child.
because they're not self-sufficient.
Right. Right. Right.
So that's why
All
it
right.
shouldn't be done.
All right, we have two more questions for you, Miss Wendy, and they're kind of fun questions.
Okay, cool.
The second to last question is this: what would your ideal client be like if you were to say the type of client that would make my job easier, make my life easier, make this go so smoothly? What type of documentation does this client provide, and what access do you need to have to them in order for you to feel like they're the ideal client?
Okay, I do have some.
Oh.
I have some ideal clients.
Why you
They know what they need to do. They always have all of their documents together.
Nice.
When they call me for an appointment, they have everything. I can completely do their taxes from beginning to end tell them how much their money is, how much their refund's going to be.
Hopefully.
I even know where to put it. They sign and life is good.
Oh.
Life is good. Right. And those documents, I'm assuming, did they give you in that little folder you were talking about? They just give it.
Absolutely.
Okay. Mhm. All right. And the last question we have for you, right, which is
Mm.
just something about you. What do you like most about your job? Because, being an accountant and dealing with money, you get all kinds of folks.
And
'Cause
people.
listen, so, money is a very sensitive topic for so many. People like to fight over money.
Mm.
They like to cut up over money.
Yes.
So, when we think about money and how complex your job is, right? What are some of the things for you that you get out of this type of work? Being in the accounting field, like what are some things that bring you joy? Is it like telling someone they got a big old check coming? Hashtag me. Is it being able to problem solve, or help a person figure out how they can successfully pass an audit? Like, what are some things that bring you joy in this field? Just because of how and emotionally charging this field can be.
Okay. I've been doing taxes since I was 20.
So that was only 2 years ago, I
Right.
guess.
Yeah.
Exactly. Exactly. 2 years ago. Now, for me, my first reason for ever thinking about doing taxes was trying to understand why Black owned businesses were not succeeding.
Oh.
You would hear of a new Black owned business coming, and then it would be gone in a year or it'd be gone in 2 years. And I decided to go out and try to figure out why. The number one reason I came across was payroll.
Lord. Woo, excuse me. Payrolls.
Yeah, payroll is the monster
Mm-hmm.
behind business.
Yes,
It's it's the biggest bill
Mm,
in a business.
mm.
And you never get a do-over, one shot, and it has to be right. That was one of the reasons why I dabbled into taxes in the first place. Over the years, I've discovered that I like helping people. People come with so many different issues.
Yeah.
Sorry. It's true.
I know it's from a whole lot of different issues.
I'm thinking mental health issues.
It's true.
Probably so, mental health included. But for the most part, for me, I love helping people. It's been something special to me. Moreover than that, numbers. I've always had a thing for numbers. I've been able to help people to understand the process of doing taxes, understanding why it's essential. If you want to be successful in your life, all of these things play a part because I always tell people the number one thing what you don't want is the OIRS. And there's always a way to get around that. You have to make sure that the right amount is coming out of your paycheck. So I encourage people to please look at your pay stub. For some reason, in the last decade or two, people have neglected to look at their pay stub. So I'm the bad guy when I tell them that they owe a ridiculous amount of money because they never paid attention to see what was coming out. My answer to that is whenever in doubt, you need to ask somebody what's going on before December 31st. You can't do it after December 31st because that year is in.
You know
But
what?
you need to do it during the year.
The deadline we didn't even think about. December 31st was the deadline.
Yeah.
We went through all the other deadlines earlier. But
Yes.
December 31st.
Before the books are closed, like
Yes.
Slam shut close.
Slam shut because it's bolted.
Yeah.
It's in the books. Once it's in the books, there is no going back. So it's essential that you ask questions whenever in doubt. There are no embarrassing questions when you talk about taxes.
yeah.
Not when you talk about my money.
Mhm.
I'll ask you anything. You sure out that penny?
Yes.
All right. And I want to say thank you so much for taking the time out of your day to spend with us and to basically drop these amazing nuggets of truth, these amazing nuggets of just insight into this complicated tax world. Hashtag Uncle Sam's pocketbook. I'm always a big
Hashtag
fan.
ever changing.
Like we always owe. So, I think that this conversation is super important. We want to say thank you so much for coming. And again, this is Wendy from Wendy's Accounting and Tax Service LLC. We want to also let everyone know, please consult your local, state, and federal branches for any questions particular to your state. This podcast and episode was for nuggets to inspire
and entertainment purposes,
to help you figure out what works best for you to then go off and do your research. Thank you so much, Ms. Wendy, for coming down and spending this time with us. It's always a pleasure.
We appreciate you.
And
Okay, thank you so much for having me.
And all that you do this year. And again, this field is such a needed field with the forever changing tax code that changes every year. So we want to say thank you.
Yeah, you wear so many hats. You're like an educator, a counselor.
I can imagine those phone calls of tears.